All right, Garage Gang, it's me, Avatar John, and yes, I am in full control of the garage tonight. The lights are hot, the engine's snarling, and the track, yeah, it's slick enough that I zipped up the fire suit before I even stepped out here. There is absolutely oil on this track tonight. And here's what cracked across the board. Trump greenlights NVIDIA's H200s to China with a 25% tariff. Google hinting ads inside Gemini. Google teasing AI glasses. Tesla taking a straight body shot. Paramount swinging hostile. But headlines are just smoke. You came for the flame. Because the real question buzzing in every group chat, every Discord, every degen circle on Earth is, did the man, the myth, the walking profit warning your wallet dreams about, Triple X, live up to his name in the trench tonight? He says yes, and he didn't come empty-handed. He brought plays. So before we drop the hammer, smash that like, hit follow, and send this to your fellow degenerates. Especially that one guy at work still talking about Pepe like it's going to $1, already planning the seat color on his imaginary Lambo. We respect his conviction. We do not respect his math. Now lock in. Let's rip into it. All right, helmets on. Gear 1 isn't where we floor it. It's where we check if the world remembered how to drive today. The so-called professionals spent the entire day telling you the market looked orderly. Orderly, please. What we got wasn't order. It was the financial equivalent of a guy duct taping his bumper back on and insisting the car runs fine. 10-year yields cooled just enough to stop equities from wheezing. Credit spreads paused, not tightened, not improved, paused, like someone hit the snooze button on a fire alarm. And the whole tape, still nervous, still tight, still pretending it's cautious when it's actually one bad print away from spinning out. Here's the truth. Fear didn't leave. Fear changed clothes. Today wasn't risk on, wasn't confidence. It was gray zone driving, the kind where everything looks manageable right up until you hit black ice at 80. Macro is a loaded gun right now. Everyone's acting calm because the safety feels on. But nobody actually checked the chamber. And looming over the entire track is one boss fight, the Fed path. The world wants a fairy tale pivot. Reality is about funding, collateral, and balance sheets, not confetti. Gear 1 tells you one thing, the engine's running, but the traction is lying. Crypto didn't bounce back to glory today. It fought. Bitcoin came out swinging this morning like Rocky in the middle rounds. He had a few good combos. He landed some clean shots. He even pushed the fight all the way up toward 92K. The crowd got loud, the corner got hyped, and for a moment, it looked like momentum was shifting. But then the market did what the market does. It punched back, hard, and Bitcoin staggered, dropped from 92 back into the 89 to 90,000 range. Blood on its mouth, knees wobbling, breathing heavy, but refusing to stay down. This is not up only. This is a fighter in a war. A fighter who knows the bell hasn't saved him yet. Here's the reality. Bitcoin isn't trending. It's whipsawing, absorbing body shots from more than $1 billion in liquidations, taking that unexpected 1.39 billion whale hook to the jaw, and still lifting its face off the mat like round's not over. And the average guy watching at home doesn't understand the paradox. How can price be weak when supply is tight? How can Bitcoin be down when there's none left on the shelves? Here's the garage truth. Bitcoin can be beaten up and scarce at the same time. That's how the pros design the fight. On-chain tells the story the charts hide. Exchange reserves for BTC and ETH are at multi-year lows. Only 8.7% of ETH even sits on exchanges anymore. Excess reserves on major venues, zero cushion, just deposits, no backup, no margin for error. That's not bullish, that's not bearish, that's danger plus opportunity sharing the same corner of the ring. A tight float can launch a knockout rally or drop the floor out in one candle if someone unloads into thin liquidity. And all of this is wired into one fuse, the December 9-10 Fed meeting with 90% odds of a tiny cut. But don't kid yourself, this isn't a victory lap, it's a liquidity and collateral reset. Wrapped in a feel-good headline, Nobody is clapping in the luxury box. They're repositioning. Miners are bending under pressure. Classic cycle bottom energy. Solana took a 12% TVL hit after a record month, and someone quietly loaded 250 million USDC onto S like they were taping extra weight into their gloves for the next punch. You're not watching calm. You're watching a fighter who's wobbling, bleeding, angry, and absolutely not finished. Gear 2's message tonight: Bitcoin at 89K is rocky between rounds. Bloody, breathing hard, still throwing shots, and still dangerous. This isn't safety. This is tension. This is the moment weak hands fold and strong hands feed. Everyone saw the headline: H200s allowed into China with a 25% tariff. Most people think that's partnership. It isn't. It's management. Because here's the raw truth the public never hears. The H200 isn't NVIDIA's best chip, not even close. The real monster is the Blackwell line, the B200, the B100, chips so far ahead they make Hopper look like last season's tech. That's the crown. That's the weapon. That's the silicon that decides the next decade of AI. The H200 is good. Faster memory, serious throughput, but it's not the top of the food chain. It's the upgraded workhorse. So why let China have it? Because China is building its own chips and training its own frontier models, and the US cannot afford a world where China becomes fully independent in compute. Not yet, not strategically, not without leverage. So Washington throws a bone. You can have the H200, but with a tariff, and only this tier, and only under our conditions. This isn't generosity. This is containment wearing a diplomatic smile. It keeps China in the race, but never in the lead. It keeps them building, but not breaking free. It keeps them reliant on American silicon instead of scaling their own domestic stacks unchecked. It lets the US watch the entire pipeline while keeping the real weapons, Blackwell and the next-gen compute, locked behind the velvet rope. And here's the part nobody talks about. China isn't powerless. They control critical minerals and refining capacity the US absolutely depends on. This isn't one-sided. This isn't naive. This is two titans trading leverage while pretending they're exchanging favors. And it ties back to what we say in the garage all the time. The United States needs minerals. Keep your friends close, but keep your supply chains closer. Because this wasn't about harmony. This was about control. Control the chips, control the minerals, control the flows, control the rails, control the future. NVIDIA isn't collaborating here, it's being used as a geopolitical pressure valve. And China, they didn't get the crown jewel. They got a bone, not a breakthrough. Google's AI Blitz, not a product launch, a power move. Google didn't announce anything today, they declared intent. Ads inside Gemini. AI glasses teased for next year. Vision, agents, hardware converging at speed. This is not innovation, this is occupation. They are telling the world AI won't just live on your phone. AI will live on you, in your habits, in your environment, in your day-to-day existence. The companies with compute win the future. Everyone else rents the future from them. Tesla down. Big money shows its teeth. Tesla dropping 4% wasn't about a downgrade, it was about permission. A downgrade gives the street cover to sell without looking like they're panicking. They aren't reacting to fear, they are manufacturing it. The downgrade wasn't the cause, it was the excuse. The real move was the selling behind it. Paramount goes hostile, media's last breath of air. A $30 hostile bid for Warner Bros. Isn't aggression, it is survival. Legacy media is drowning. Streaming stole the audience. AI is about to steal the creators. The old guard has one play left: buy scale or get eaten. This wasn't strategy. It was self-preservation with corporate makeup on. The undercurrent, what all of this really says. Every headline today carried the same pulse. Everyone is positioning before the Fed. Not for the rate cut, for the plumbing behind it. For control over collateral, for control over liquidity, for control over the year-end balance sheet choke points. This is a resource war, a compute war, a liquidity war, a narrative war, a power war. And every move today was about tightening grip around the same six things: control of supply, control of chips, control of minerals, control of data, control of exits, control of leverage. Retail sees news, professionals see motive, and tonight the motive was the same across all fronts. Prepare for the Fed, position for the plumbing, control the rails before someone else does. Gear Three's message tonight: headlines scream, motives whisper, and the whisper was louder than the scream. Gear 4 is where the separate storylines stop pretending they're separate. This is the moment everything converges: crypto supply shock, Wall Street's positioning, the Fed's shadow, and the liquidity plumbing underneath all of it. This is not a calm market. It's a market bracing for impact. Let's break it down. The Fed isn't making policy, they're managing plumbing. Everyone keeps chanting 25 basis points as if that one number is going to save or kill anything. But the cut itself is irrelevant. That's the headline, the distraction. The real game is underneath: collateral stability, repo flows, auction digestion, funding conditions, year-end balance sheets, interbank incentives, derivatives margin frameworks. This is a liquidity negotiation, not a holiday gift. The Fed isn't trying to please the public. They're trying to stabilize the system going into year-end without triggering a collateral panic. The cut is small. The consequences are not. Crypto float is tight, and that's a double-edged sword. Bitcoin sitting around 89 to 90,000 isn't a trend, it's a tension point. Exchange supply is bone dry. ETH barely exists on exchanges. Solana reserves are thin. Binance has no cushion. Miners are in capitulation mode. Stablecoin flows are shifting. $250 million USDC just loaded onto Solana like ammunition. This is not a comfortable setup. This is a compressed spring with no clarity on which direction it will snap. A tight float can ignite a face-ripping rally or a one-candle trapdoor drop if stress hits the wrong venue. This week is not about price momentum. It's about supply structure meeting macro risk head-on. Market positioning is not bullish or bearish. It's hunting. Right now, the street isn't betting up or down. They're positioning to harvest liquidity on whichever side breaks first. Bonds are nervous. Equities pretend they're calm. Rates volatility is elevated. Equity volatility is suspiciously low. The oldest setup in the game, where calm is manufactured by positioning, not by confidence. This is classic pre-event coiling. Everyone is waiting for someone else to blink first. And crypto? Crypto is the boxer in the corner, bleeding, breathing, and still dangerous. The system is preparing for a shock. It just hasn't decided which way. If the Fed leans dovish with plumbing-friendly language, volatility compresses, risk assets squeeze higher, AI and crypto catch wind, and the face-ripping rally becomes real. If the Fed hesitates, wobbles, or leans cautious, equities correct, rates spike, liquidity gaps open, and crypto sees exactly the kind of forced unwinds that turn thin exchange buffers into chaos. This is a binary week, and both sides of the coin carry violence. Gear 4's message tonight: this market is not waiting for direction, it's waiting for a victim. Everything you saw today, the NVIDIA move, the AI blitz, the hostile media swing, the Tesla permission slip, the crypto whipsaw, the on-chain tightness, the geopolitical mineral tension, all of it is positioning for what happens after the Fed speaks. You are standing on a track where the car is low on gas, the tires are bald, the pit crew is nervous, and the next lap decides who spins out and who slingshots forward. The system is coiled, the players are loaded, the rails are tightening. The next move is not going to be subtle. Gear 4 ends on one line. This isn't volatility, this is the warm-up. Now we enter everyone's favorite part of the night, the trench. But tonight, the trench isn't some dark back room of the garage. Tonight, the trench is Las Vegas, the Luxor Casino, that black glass pyramid rising out of the sand like a monument to bad decisions and great stories. Tourists losing their minds at the blackjack table, bachelor parties fighting over who owes what, slot machines screaming like emergency alarms, everything loud, chaotic, and designed to separate fools from their money. And tucked way in the back, under a cold blue lamp, two monitors glowing on a high-top table. That's where Triple X is sitting. Not gambling, not partying, not wasting time. He's hunting. The new projects, the first cut. While everyone else is out there playing games, Triple X is running reconnaissance. DOR, solid LP, clean contract, real holder growth, worth watching. Axiom, great velocity, narrative forming, but the LP needed one more day to tighten up. Bolax, heat in the socials. But the liquidity concentration made it dangerous. One wrong move from a top wallet and the whole chart goes down the elevator shaft. Binance Jr., super clean on paper until you see 94% of the LP in one wallet. That's not a play, that's a tripwire. Big, fraud, white, too thin, too exposed, too early, too risky, too messy. Triple X passed on all of them, not because they can't move, but because they didn't match the criteria he lives by: structure, distribution, liquidity, narrative, timing. And then one chart stopped him cold. The moment. Franklin at 2:30 p.m. It was 2:30 yesterday afternoon. The entire market was wobbling. Fear was thick. Everyone was calling for deeper dumps. Franklin, the combat turtle meme, was buzzing all over X. Holder count flying. Liquidity deep. Distribution elite. Narrative strong. Volume steady. Then it happened. The pullback. Not a dip. Not a correction. A straight fall to 4 million market cap. Retail panicked. Influencers declared it dead. Telegram groups lit on fire. But in the Luxor, under that cold blue light, Triple X leaned forward, watched the order book settle, saw the LP hold its ground, saw the top wallets refuse to move, saw the flow compress but never die. And he said quietly, calmly, like a man who's been here before, "This is it." 25 SOL in. Perfect fill. No hesitation. That's not a gamble. That's a read. A trained fighter knows when the opponent slips. A trained trader knows when liquidity misprices fear. The payoff. The clean exit. Franklin didn't drift back. It launched. 4 million became 5. 5 became 10. 10 became 17. That 25 SOL turned into roughly 106. Anyone else would have lost their mind. Anyone else would have chased it. Anyone else would still be refreshing the chart. Not him. Triple X stood up in the Luxor, closed the laptop, pushed the chair back, and called it a night. No celebration, no ego. Just a clean execution from a man who knows enough is enough. That's why everyone loves the trench. Because it's not about luck, it's not about hype, it's not about the noise. It's about one thing: precision. Triple X walked into Vegas with discipline and walked out with results. While everyone else was chasing candles, he was collecting edges. While everyone else was gambling, he was working. While everyone else was praying to the chart, he was reading it. The trench message. Most people enter the casino to feel alive. Triple X enters the casino to stay undefeated. The trench doesn't care about dreams. It cares about structure. It cares about timing. It cares about courage under pressure. And last night, at 2:30 p.m., Franklin blinked. Triple X didn't. That's the trench. Before we get into the levels, Lulu wanted to start with something simple, especially if you're new and trying to understand how she reads the chart. An EMA is an exponential moving average. It smooths out price and tells you where momentum is drifting without the noise of every tiny candle twitch. And when Lulu says the 6 EMA, she means the moving average that tracks the last 6 candles. 6, not 60, not something mystical, 6. It's the fastest momentum line on her screen, the one that tells her whether buyers are in control, sellers are in control, or neither side deserves her money. If price is above the 6 EMA and holding, momentum favors upside. If price is below it and rejecting, momentum is weak. If price keeps touching it but never closing above it, the market is lying, and she doesn't reward liars. That's the whole lesson. Simple, powerful, enough to save you from half the bad trades you've ever taken. Now here's what she actually sees today. Bitcoin lived below the 6 EMA most of the day. Weak bounces, shallow rallies, no conviction. But midday, there was one perfect reclaim, one candle that actually closed above the 6 EMA with volume behind it. She took that scalp, pulled a small win, and stepped away. After that, not a single clean signal worth touching. If Bitcoin reclaims and holds above the 6 EMA again, it pushes toward 91,000, then 92,000. If it keeps rejecting, we revisit 87,500, and if that breaks, the next zone is 85,900. Support 89,000 to 87,500. Resistance 91,000 to 92,000. Lulu's line above the 6 EMA or nothing. Ethereum spent the entire session jammed under the 6 EMA. Every attempt to reclaim it got stuffed. That's why Lulu never touched it. If ETH reclaims the 6 EMA and confirms, target becomes 3,122, then 3,180. If it keeps rejecting, we drift to 3,090, and if momentum fails harder, to 3,040. Support 3,090 to 3,040. Resistance 3,122 to 3,180. Lulu's line, this isn't strength, this is maintenance. Solana looked tired all day, heavy candles, half-hearted pushes, and the 6 EMA pressing down like a ceiling. If Solana breaks above 134 with real volume, we test 136 and maybe change the tone. If it loses 131, we slide to 129, and if that folds, to 126. Support 131 to 129. Resistance 134 to 136. Lulu's line. Sol can run, but today it didn't want to. When the 6 EMA refuses to give direction, when every bounce dies under it, when every reclaim gets slapped down, the market is telling you not to trade it. That's why I took the one clean scalp and left the rest alone. And as always, none of this is financial advice. And yes, the head of technical analysis in the garage is a pig. If you're taking financial advice from livestock, that's between you and your broker.